Hello, Bulls and Bears. It is Tuesday, November 30th, 2021. Back with another dose of economic reality. We've got a lot to talk about today and things that we need to be aware of as we head into the last month of the year. Tomorrow is December 1st. And some very interesting things, in my opinion, have been happening that we're going to talk about today. Some things are pretty obvious that are happening right now. That we all have been hearing about. But it's interesting the narrative that's being put out there regarding inflation and the economy. We're going to talk about that first. We're going to talk about housing, the markets, and a few other kind of Main Street type of economic information today as well. Let's start right here. Fed Chairman today, Powell, came out and basically admitted that they were wrong. Now, did they come out and say that they were wrong? Of course not. What they said was, we're going to retire the word transitory, and basically admitting they're wrong because they said inflation would be transitory. And here's a quote from one of his recent speeches here. I think it's probably a good time to retire that word and try to explain more clearly what we mean. Well, thank you very much. Here's the problem. They don't actually know. Right, but let me add to that. They could know. They could know exactly when inflation would end. How would they know? Well, they would simply raise interest rates, stop buying securities, including mortgage-backed securities. You would see the housing market plummet, and we're going to talk about the housing market here in a little bit. But yes, they could change the direction of this economy at any time. Just stop buying the bonds, stop buying the assets, the securities, raise interest rates, put regulations on the banks that say they can't loan out money that they don't have, eliminate the fractional reserve system, and that would be a surefire way of bringing prices back into affordability for more people. All right, so I always like to remind everyone here the power that they actually have. At the snap of a finger, they could change the entire direction of the prices that we pay for goods, products, services, housing, etc. But you see, falling prices would destroy the illusion. When prices are rising, they could just point to that and say, hey, look, everybody's getting rich. Prices are rising. Stocks are going up. In the meantime, it's 90% of all stocks approximately are owned by the top 10%. Right? Maybe a little bit of relief in sight for gas prices as oil tumbled below $65 for the first time in 3 months on the fears of the next phase of this health crisis. And stocks were allowed to drop today. We see the Dow Jones down 650. We'll see what happens tomorrow. But yes, I say they let drop, or were allowed to drop, because there is something called a plunge protection team. The money printers even have a trading desk, which is it's open information. It's not something that's a secret or something like that. It's something that they actually admit to. All right, so why would they have a trading desk if they weren't trading stocks and manipulating markets? Please let me know down below if you have the answer to that question. Now, as I have indicated on numerous videos here, it is the working class that's facing the toughest time with all this economic turmoil happening. Now, if you're making money in the markets, you may not say this is turmoil, that this is great for trading. And yes, if you're buying the right assets, you can definitely make money off of this. The thing is, most Americans are not active traders. Most Americans that are active in the stock market are just active in their 401k, their retirement accounts. They're what's called passive investors. But yes, if you're a trader, if you buy and hold the right assets, many of them I've spoken about here in this channel, you can definitely make good money. I happen to be a trader, and I'm doing okay. Probably not enough to keep up with these rising costs, though, if I have to be honest about it. Right now, if I had millions of dollars to invest, then a doubling of my money, that would be very, very nice. But if you're only trading, with a few, maybe $10,000, $20,000, even tripling your money is really not going to get you to the next level, or it's definitely not going to put you in the top 10%. Oh, there goes my water cup. Sorry, my water bottle. Why are blue collar Americans dying of despair? And it talks about here, this is out of Bloomberg, it talks about how disappearing jobs, the decline of family life has fueled an epidemic of addiction and substance abuse. And we see increasing depression, things we've talked about here over the past few years. The number one reason for divorces and relationship distress is financial reasons. So we're seeing more of that. We're seeing more people turn to medication, antidepressants, etc. So yes, all of this is punishment towards the working class. If you're not working for your paycheck, you may not really notice this too much, but it's the working person that's getting punished. The person that has to commute back and forth to work, that's paying higher and higher gas prices, higher and higher vehicle prices, the insurance for the vehicle. The person trying to keep their household in the green and not go into the red, not go further into debt, they're paying higher utility costs, higher heating costs. We actually saw an explosion in the demand for firewood because the heating costs have went up so much. And it's similar to what we talked about just a few reports ago, how more people are becoming hunters and getting hunting licenses because the cost of meat is going up so much. Well, more people now are trying to get their own source of heat, and firewood's back in high demand with the high cost of heating and cost of gas. We're seeing natural gas costs go higher. So yes, the working class, the people that are trying to keep their household out of debt and solvent, they're going to be the ones that are punished, and they're going to feel the most pain out of this. To sum it up, everybody, we've got big problems in this country, and I think we all need to be very, very careful about our spending. And that reminds me of something I wanted to tell you about. I have a friend that over the past few years, they've made it clear that they were looking to buy a home. Well, homes were not affordable when they first started telling me about this back in 2017, 2018, around that time. And now homes are even less affordable. And their whole strategy was, we're going to sit and wait until we get a bigger down payment. And the longer they wait, yes, they're getting a bigger down payment saved up, but the price increase of the homes is outpacing how much they're able to save for a bigger down payment. So actually, even with a smaller down payment a few years ago, they were better off now with a bigger down payment because home prices have went up so much further percentage-wise in relation to how much extra they saved up for their down payment. So now they've basically given up. They were holding back on vacations and traveling and certain things like amusement parks. They were holding back on all those purchases in order to try to save up for a bigger down payment. And it's pretty sad to see this. And I think there's tens of millions of households just like them. And now they've basically given up. So they started traveling again. They started making more purchases that they really don't need. And they've said, well, we'll never be able to afford a home. We're just going to enjoy life now and just go ahead and spend money on whatever, new bigger TVs, more traveling, more vacations, more amusement parks, more ball games, etc. And I think that's a lot of what we're seeing here with this increase in spending. When we show these articles that say people are still spending money or record holiday shopping and all that, I think that's a big part of it. People have given up on just trying to save up for whatever it is they're trying to save up for. And actually, Black Friday was a bit of a disappointment. From what I read, people were looking for better deals and better sales, but when you have so many cargo ships still off the coast, all of those items may be in shorter supply than the stores really want. So we didn't see amazing deals this year. I really didn't do any Black Friday shopping, but from what I hear, the deals were not so amazing as in previous years. All right, let's talk about housing. Now, we did see not falling prices, but deceleration in prices, and I've got a box around this chart right here to the far right. These are the Case-Shiller 20 City Composite City Index here, and these are year over year. And we still see, fast rising prices. That has not changed, but we finally did see a deceleration in prices. Now, it doesn't mean prices are dropping. For prices to be dropping, falling prices or dropping prices, you'd have to see prices go all the way down here into negative territory or below zero, right down in this range. So definitely not anything close to that, but it is interesting. We look over the past couple years, we haven't seen many slowdowns or deceleration, especially one like this. Again, if you look to the far right of the chart here. So it is something to keep an eye on. Did Zillow and all their problems with the home flipping, did they scare off other institutional investors? Well, the third quarter numbers say no. We still see over 1 in 6 homes being sold to investors and big money and big companies, big corporate institutions. Is it the end, the beginning of the end of the housing bubble? Or is there no housing bubble? Because the banks can keep out loaning money now with zero reserves required. So no matter how high home prices get, there's always going to be a buyer. Please let me know what you think down in the comments. But there's many people saying that at some point they're just going to pull the rug on this. They're just going to raise interest rates. They're going to say enough is enough. And a lot of people, including myself, are thinking, yes, that's going to happen. They're just looking for the opportunity to do that. So maybe they're going to let prices rise further before they hit the panic button, so to speak, and bring it down by raising interest rates. And they're going to say they only did that as a response to the rising prices. So maybe that's what they're going to do. You know, nobody knows exactly. As far as I know, nobody knows exactly. If you do know, again, please let us know down in the comments. I do read your comments, and I appreciate your comments. I've actually learned a lot from all of your comments and interaction on this channel. Thanks, everybody, for the feedback that you give me, both positive and negative. It does really help. Either way, thank you so much for being here. Hope you come back for more news, financial, economic news updates. Thanks, everybody, for being here. Stay well. Peace.